Hi, I'm Hilary and welcome back to my channel where I help UK small business owners and entrepreneurs achieve personal financial freedom. So today I'm talking about some pitfalls of managing dividends and taxes and how they can lead to financial complications. Let's explore some scenarios and how to avoid them. So I've seen it quite often over the years. It's easy to take dividends from your business and forget that you have to pay tax on those dividends. So you spend the gross amount and then you're hit with a large tax bill on your dividend income and you don't have the personal funds to pay it. You might consider taking a director's loan from your company to cover it, but while this might seem like a quick fix, it can lead to several issues. A director's loan account allows you to borrow money from your company, but it must be repaid within 9 months of the company's year end to avoid additional tax charges. If the loan isn't repaid on time, the company faces a 32.5% corporation charge on the outstanding amount. And also, if the loan exceeds £10,000, it's considered a benefit in kind, subjecting you to further personal tax implications. This solution can quickly become a financial burden if not managed properly. Another common scenario is taking additional dividends to pay the tax bill. This can also lead to a vicious cycle. You take the dividends to cover your tax bill, but then of course those dividends are also taxed, so you're just bumping the problem on. It means you'll owe more tax, leading you to take even more dividends, and the cycle continues. I've seen company directors get into a complete mess with both of these scenarios. It can deplete your company's reserves and it can lead to significant financial stress. So please be aware of these pitfalls and plan ahead. For every dividend payment you receive, I suggest you put at least 20% of it into a separate personal tax account. Trust me, you'll be so glad you did when the tax bill is due. Work with your accountant to forecast your tax liabilities and set aside funds regularly. I would suggest avoid loans. Try to avoid taking loans from your company. If you must, ensure you have a clear repayment plan and stick to it. If you feel the dividend tax is getting out of hand, maybe have a period where you take more salary, which is taxed on a PAYE basis. It isn't as tax efficient, but it does mean that the tax is taken care of. You can always change back when you've caught up. Carefully plan your dividend withdrawals to avoid creating additional tax burdens. Consider taking a mix of salary and dividends to balance your tax efficiency. These tips can save you a lot of stress and sleepless nights. So if you have any questions, drop them in the comments below and like and subscribe. It really helps me, and I'll see you next time.